Over the world, you're alive and blessed. You can't really complain. Welcome to Misunderstood, an MYB trading course. In today's session, guys, we're going to talk about mastering top-down analytic. What is top-down analytic? Why is it important? And common mistake that a lot of traders make in the market. So, guys, top-down analytic session. We're going to talk about what is top-down analytic, why we look at multiple time frame instead of just one time frame, how to trade using multiple time frame, analyzing the chart, guys, from the higher time frame to get the overall narrative to the smaller time frame to get your key entrance. We need to look at the big picture, guys. The stock market is all about the big picture, the overall flow, the overall structure. A trend on the higher time frame is a run on the lower time frame. So the key components, guys, to gain a clearer picture of the overall trend direction. Is trend on a bullish market, is trend on a bearish market, or in price just consolidating and just being boring for the day. So we just not gonna trade on consolidation. Gets the optimized entrance, guy. The key about the stock market is getting the perfect, and I wouldn't say perfect entrance, but at least getting at a perfect demand zone or extreme demand zone or a good supply zone or an extreme supply zone. We check for your blind spot, guys. You always got to watch your back in the stock market because you never know when liquidity will sneak up on you. You know what I'm saying? Liquidity is like the ops. You don't want the ops sneaking up on you, right? So what we will do today, guys, we will look at the daytime frame. If you want, you can look at the weekly too, but I wouldn't really discuss the weekly because we want to see what price is doing right now, right? Right now. So we're gonna look at the daytime frame to get the higher time frame, the overall direction. Like I said, price going on a bearish, price going on a bullish. After we identify that on the daytime frame, guys, we're gonna move down to the 15-minute time frame, guys, right? So after we come down to the 15-minute time frame, we're gonna draw up our what? You guys know it, the supply and demand. You always gotta cover your supply and demand. After you cover your supply and demand, you got to look for your order blocks. You guys should know what order block is. If not, I'll give you guys a quick run through later on in the video about order block. Then, guys, the key, the market structure. You need to understand the market structure and your break off zone, right? Your break off. I'm saying your break off structure. So, with all that chatting being said, let's get right into it, guys. Mastering top-down analytic. What is top-down analytic? Is a trend approach that involves analyzing financial market from higher time frame to a lower time frame. It provides a broader perspective, guys. Like I said, the stock market is about the overall view, so it provides a broader perspective on the stock market. Top-down analytic is a very powerful method that also helps traders make well-informed decisions by analyzing multiple time, guys. The multiple time frame is the key, right? Multiple time frame is the key. A lot of people just jump on the charts and go on the 5-minute time frame, which is pretty much bullshit. It's just BS. You guys don't really consider a trader if you guys look at one time frame, right? So after we analyze that, guys, why is all of this what I'm saying important about top-down analytic, right? It's important, guys, because it helps you guys identify the overall trend and avoid common trend trades, right? Provide a structured approach of the market, and it increase the probability of high quality setup, right, guys? With all that chatting to say, let's really go on the chart, right? So as a beginner trader, right, what usually traders will come do, they will go on their chart, they will go on their 5-minute time frame, and they will just pretty much draw up their supply and demand zone on the five. So they will come here, right? Draw up their resistance there and their demand here, right? And they would enter the trade, right? Enter the trade for a call or a put. Let's say they're going for a short and they short it here. They put a stop loss above there, and they take profit below there because that's where they're assuming price is going to go. With no really understanding what just happened, they just draw up a supply and demand zone on a 5-minute time frame for no reason. Even though price may still come back in this direction and eventually you might win maybe $40, guys, the money in the stock market it's irrelevant. move the profit and the money from the remove making money in the stock market. When you're going into a trade, guys, you guys must worry about how much you're willing to lose, not how much you're going to make. The money is going to come, guys. In trading, sacrifice the first 1 or 2 years into just learning. The wisdom is more important than the money, guys, because you guys can just get lucky by just placing these random ass trades and get you guys $100, $200, but eventually, oh, you can believe this, eventually that market will come back and get his, right? So what you guys usually want to do, all of that chatting, right? What we usually want to do, first thing first, you come on the day time frame, right? You guys could also use the weekly time frame if you're like an old head who just don't really care about the stock market. They just want to invest in the stock market and just draw up. Guys, remember I told you guys, a trend on the higher time frame is a run on the smaller time frame, right? So what you want to do on the daily time frame, guys, is pretty much just see what price is doing. Just breathe, relax, take a deep breath, go on the daily time frame first. If you guys go on any time frame before you guys make a trade, please use the daily time frame, first time frame. So we're gonna go on daily time frame, and you guys want to zoom out. You don't want to zoom in on the daily time frame. You don't want to zoom in, right? You want to zoom out to see the overall flow, to see what price is doing. So you guys can see right now, price starts from here. Price went up from a higher high, swing low, came back higher high, a little swing low, came back higher high, swing low, high high, swing low, high high, swing low, high high, swing low, high high. So as we can see here, price is still trying and it's going up. It haven't really show you guys a downtrend. See, the trend, guys, the trend is your friend. The trend is the girlfriend, the husband, the wife. Stick to the trend. You want to trade with the trend, never against the trend. So if you guys identify now, we're in a bullish market. Now what we want to do, guys, we move to the 15-minute time frame, guys. We move to the sim. Now what you guys could do, right, on the 15-minute time frame, if you guys are an intraday trader, I would not recommend you enter on the 15-minute time frame. Why I say I wouldn't recommend that? Because on the 15-minute time frame, if you guys could see, it could be a perfect entrance, right? But if you guys enter on the 15-minute time frame and you guys planning on selling that company or that stock that particular day, I wouldn't recommend it. This is the reason why I would recommend it. Let's say, for example, right, you enter this trade here, bam. You put your stop loss there, bam. You take profit at this gap right here, right? Because price is gonna always fill the gap. So now let's say you put your stop loss below here, right? Perfect. Now, guys, remember now, this is the 15-minute time frame. Each one of these candlesticks represent the time frame we're on. So let's say we go to a 1 minute. Each one of these candlesticks represent 1 minute. We move to 15 minutes. Each one of these candlesticks represent 15 minutes, right? So now let's say, guys, we enter this trade on a 15 minute, but we plan on selling this trade before the market close at 3 o'clock, right? So you enter this trade now, right? So you enter this, let's say you buy this contract on Robinhood or E-Trade or Webull, whatever broker you prefer, and you buy this trade for, let's say, average of $65, $70, right? You're gonna be in profit, right? But the market, remember now, each one of these candlesticks now is 15 minutes, right? So 15 minutes, 15 minutes, 15 minutes, soon it's gonna be 3 o'clock, right? So the money you making on a 15-minute time frame, because price is not gonna just come down and just go back, it's gonna be around here all day. It's gonna be down slowly, come back up, come back for a breakout structure, touch your order block. Because you guys can see now on a 15-minute time frame, you don't really seeing shit. You don't really trade a 15-minute time frame unless you're gonna use it for a swing trade or hold a trade for a week, because eventually price is gonna always fill these gaps, right? But it's not guaranteed, guys. It's not really guaranteed to fill that gap that particular day. But eventually now, like I said, if you're an old head who don't really care, who just want to invest, you go on the 15-minute time frame, you go on the day time frame, you look, you find all of your gaps, all of your supply zone, and then you can buy your long contract, go on Robinhood, go on your expiration date for, like, let's say 2025 for like almost November or January. Because end of the day, guys, price will always come back to a gap, right? So if you guys want to just be a long hold traders, you enter on a 15-minute time frame and just wait. But I personally don't recommend it. I recommend you get in and out in a trade in a day, maybe 30 minutes to an hour. Take your profit, go about your business, pop a champagne, hit a wood if you guys want to, whatever your preference is, and enjoy life, right? Don't look at the chart. So what we do in the 15-minute time frame, we remove all of this. Because for us, we day traders, right? We day traders. We want to be in and out of the market. So what we guys want to do now, we can keep this because this is solid demand zone, right? So what we guys want to do, right? Like I said, I'm going to talk to you guys about order block. Have a look at that. The order block is right here. So let me give you a quick review on order block. An order block, guys, is a candlestick prior to that long candlestick that you will see. And it must close either above the previous candlestick, which is here. It closed above it, and it must have a gap. A gap, and it might not, and it might not yet be mitigated, right? So as you guys can see, we have a gap here. So that means, guys, this is the perfect order block here. The price will touch this order block whether you like it or not. Price will touch this order block before. Price could touch this order block before the end of the day. Order block is solid, but a gap, not too sure about a gap touching in the day, right? So after we identify our supply zone and our structure zone, right, we might look at this and be like, you know what, guys, since Butter's saying price is gonna go to order block, I'm just gonna put a long right here. I'm gonna put a long right here and below here, and I'm just gonna ride the wave up there because he says price is gonna go up there. See, wrong. The reason I say wrong, guys, this is why you use every time frame possible. Because even though, guys, price is here and it will come to this order block, the higher time frame, right, as you guys can see, it could be on a bullish, but on a lower time frame, price could be on a bearish. The reason price could be on a bearish on a lower time frame because price had make a breakout structure to the downside, and price is gonna retrace, right? So now, after you identify this on the 15-minute time frame, you realize, all right, there's an order block there and a demand zone there. Fine. I'm a day trader, so you know what? I'm not gonna use the 5-minute time frame or 15. I'm gonna trust Butters because he know what he's saying. I'm gonna go down to the 1-minute time frame. But notice, guys, I went to the day first, then I moved to the 15, then I moved to the 1 minute, right? If you guys could trade the 5-minute time frame. I traded the 5-minute time frame for a while. I mastered the 5-minute time frame. That's why I moved to the 1-minute time frame, because price is gonna move to the 1 minute first before it get to the 5-minute. So whatever happened on the 5 minutes is gonna happen on the 1 minute time frame first. So if you guys master the 1 minute, the 5 minutes become a liability, right? So what we do now, after we master the 5-minute time frame, we simply just move to the 1 minute. Guys, the 1 minute time frame is the key, right? So now what you guys want to do on the 1 minute time frame now, you guys want to zoom out, right? We don't want this no more. We can put this back if we need it. So what we want to do, and see, guys, the key is right here, right? So now, as always, guys, look for the, what we looking for, guys? The market structure. It's price on a downtrend. What we doing? So as always, price went up, form a higher high, higher low, higher high, swing low, higher high, right? So now we understand this baby right here was the high for the day. Price came here for the high for the day, and buyers said, you know what? I'm not buying this no more. I'm done for the day. I'm start taking profit. So after a lot of people start taking profit here, everyone start taking profit and just follow the crowd, right? So everyone start following the crowd, and price came right here, and we had a what? Market shift right here, guys. This is where the market shift right here. The breakout structure here. We can put a breakout structure here, and we can put the next one right there, because this right here was the what? Previous low, right? So we put this here, guys, right? Guys, remember I tell you now, every time price break off, it's gonna always what? It's gonna always retrace, right? So now price form right here, a lower low, lower high, lower low, lower high, lower low, lower high, and price came all the way down here now to be a downtrend, right? So notice now, right? So let's just mark this off for you guys. Simple as that. The last one right here. So this was a waste of time because price don't break past this. So what I'm drawing right here, this don't even matter because price completely destroyed that one, that demand zone. So we draw the extreme demand zone, which was here. As you guys can see, price totally respect this order zone here. This extreme demand zone, guys. If price was to continue going down, it would never have stopped here, right? It would have come down and break past it. So once price is at least halfway, you will enter for the trade. Now notice, right? It was a downtrend, right? So you guys can see price pretty much came from a lower low, lower high, lower low, lower high, lower low, lower high, came back down, hit the demand zone. Will we still enter the trade? No, you gotta wait to get confirmation. And you guys can see here, this was the previous low, right? So we can mark off this one right here. Bam. So now, as you guys can see on the 50, remember the 50-minute time frame, right? What I draw on the 50-minute time frame, I draw a long call on the 50-minute time frame, right? But you guys can see here, liquidity, right? Above here is a shit ton of liquidity waiting to happen, right? Right. So what you guys want to do, because if price was eventually was going to keep going back up, it would have from here, it would have continued going back up to form a higher high, higher low, and touch here. But price failed right here to give you guys a swing high, swing low, and above every swing low, we will find liquidity, right? So since we identify here now, we move to here, we draw off our next one here. I didn't see addicted like we. So you guys can see here now, we have a next demand zone here, guys. A next demand zone, right? All thing about the stock market, guys, is about patience and key, right? So after you guys analyze all of that, all of this here, guys, is just demand zone and supply zone, right? So either you guys can enter the trade. Let's cook this up for you guys. Let's be patient. Let's be patient for this one. It's all about patience in the stock market, guys, right? Guys, so while we're being patient and we're waiting for our setup to happen, let's go over some common mistakes that a lot of traders make in the stock market, right? A lot of mistakes that a lot of traders make that I speak of before, they fail and they ignore the higher time frame trend, and they enter trade that is pretty much premature, right? They don't wait. The stock market is about patience, guys. It's about waiting for the right perfect setup, right? And they use the lower time frame without using a higher time frame to understand where market is really fluctuating, where the price is really going, right? And overall, they overcomplicate it. I don't know where you guys get all of this indicators from, or you guys overcomplicate trading with indicators, with VWAP, the resistance, the MACD, all of these indicators right here. Guys, I was one of those guys. I trade a lot of indicators too. See my indicators here, what I have? The double EMA, the Fibonacci is my favorite one. I pretty much make a video, guys, about the Fibonacci. And the super, guys, indicators to me, to my preference, it's a liability. But I'm telling you, there's a lot of millionaires out there who trade indicators and master it. So if you guys can master indicators, sure, go for it, right? Now, bingo, here we go, baby. It's almost that time to take a short, guys. Almost that time till we want to take a short. So we wait the price to come up in this demand zone, right? So if price is going to respect this supply zone right here, what price would have done or will do, to be honest with you, it will come above here to sweep some liquidity above here, right here, then eventually coming back down to where this breakoff structure start, our first demand zone, right? Then see now, guys, is a supply zone here, and it's an extreme supply zone here, right? So which way will price go, guys? I ain't got no crystal ball, and even if I do, I wouldn't tell you guys. I would just keep my edge, mind my business, and become a very successful trader without you guys. But in the stock market, either price is gonna come up in here, respect this demand zone, this supply zone, my fault, and continue coming back down, or price is gonna come up here, put your stop loss above here, and come back down. So all, like I said, guys, and about trading, everything is about patience, right? You guys have to wait in trading. So but normally what you guys pretty much could do is just short right here, but just wait. Once price have not yet break past this, right? But I'm telling you, this price right here, it will break past this, snatch some liquidity from top here, and then continue. It will come back down to at least this right here, because this is where lead to the break off structure. See price from here, guys. It's the key, guys. See, price came from right here, right? It made a break off structure from here. This where the breakout structure happened, because this was the previous high, and price came back down, mimicated it, and shoot back up, guys. Guys, key factors about trading, right? If you guys are a trader, what you guys need to pretty much have in you guys trading arsenal: practice. Before you practice, you must learn it. Learn trading. After you learn trading, guys, you guys wanna practice it. How do you practice it? I don't really recommend you guys go on a demo chart, right? If anything, I really practice on Bitcoin, because Bitcoin, guys, is the live chart. Bitcoin here, its chart never stops. You guys practice on a demo chart. You guys could. I don't use bar replay, because bar replay, you could see what's going on. So if I use bar replay to teach you guys what am I doing, it's gonna be like, is he really saying shit? Because he could see what price was. So all he has to do is bar replay and say, oh, we can go right here, because I could already see the price going. So I wouldn't recommend you guys use a demo account or bar replay. Always draw up on a Bitcoin. Draw up whatever you want to draw up. Your demand zone and your resistance zone. Right? Set your trade on the there. Set your guys trade. Let's say we want to go for a long. Set you guys trade for a short it. Set you guys for a short. And don't even look at it, guys. Just leave it. Do not touch. Do not move that thing. No. Set your trade. Set and forget. And go. Just go. If you guys want to have like an extra confirmation code, just hit this plus right here. Hit this plus right here. Get the alert. And this alert right here, because this trading view is going to link with your phone. So when price cross here, then it's going to hit you guys an alert. Other than that, guys, don't even do all of this, stare at the chart and get FOMO of just, oh, price is going up. Guys, these candlesticks represent 1 minute, 50 minutes. So the time you spend looking at 1 minute, you just waste 1 minute of your life for no reason. When you already enter the trade, leave it, guys. Just go. Don't even, guys, just go have a life. Okay, just have a life, guys. Guys, with that being said, guys, I hope this top-down analytic video find you guys helpful, impactful, and it will make you financial freedom, guys. As always, you know it, guys. Mind your business, stay blessed, and continue to practice, practice, practice. Practice, people say practice make perfect, but practice don't make perfect. Practice make improvement. In the stock market, guys, there's no such thing as perfect. It's always such thing as an improvement, guys. As always, stay blessed and mind your business.